Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming out of a midweek rare holiday and markets slightly lower. I mean, we have 2 days of US markets to react to. Lots of news flow. We'll pick and choose because the volume of news flow is just staggering, especially with regards to Trump, tariffs and more. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good morning.
Hi, good morning. Trump, tariffs, Nvidia tech. You've got cables and wires, cement stocks to watch, RBI. And not to forget, it's the series expiry. So an action-packed Thursday morning.
Well, that's right. And the golden visa as well. I mean, in the United States, 45 crores, whoopsie-daisy. that's a large one.
Yeah, I mean, I think the earlier program, the EB5 program, used to cost about $800,000. That's a 6x price increase.
True.
But as someone said, right, it's just half of the cost of what you would pay to buy a property in Camellias in DLF.
I mean,
I'm just...
That's true, but yeah, I mean, you know, like everything, cost is going up, right? Yeah. Tariffs are taking prices up, and of course, the pathway to US citizenship, the price is going up as well. Well, let's just see if the market can do anything of that sort, go up, that is. But just the first price action, right? Last 2 days in terms of what we saw. So Tuesday's US market session, yesterday's US market session, so 2 days worth of reaction, and that's what it amounts to. So S&P down about 0.5%. The NASDAQ is down about 1%. The 10-year yield has sold off 15 basis points in the last 2 sessions. That is huge. If you can move the graphic along, 10 basis points day before yesterday and 5 last night. And we are now at 4.25%. That is actually a very, very large move coming in as far as yields are concerned. And at the margin, I think this is more to do with growth fears coming back. And I'll talk about that in a bit. Dollar index is down as well. So for a 2-day basis, not very much, but 106.45. Oil prices are down 2.5% to about $73 a barrel. So everything kind of down and subdued. That's essentially the takeaway over the last 2 sessions. Now, the news flow, I'll start with what was latest, which is Nvidia earnings. Numbers came out post-close. They've beaten expectations, but it is not a blowout quarter. Both on the fourth quarter numbers and the first quarter guidance, numbers are better, but marginally better. Nothing like what we saw 2 quarters back. I mean, actually, when they really were, you could describe them as blowout. Nothing of that sort. So Nvidia CEO Jensen Huang said the demand for their newest Blackwell chips have been amazing. So that was essentially a commentary. And I think this view will evolve on Nvidia, even though we've seen a 1-day reaction. I think the stock swung. It was actually, up at one point. Then last I checked, it was down about just under 1% or so. That's, of course, post-close. The close itself was about 3.5% higher. Now, Trump, of course, is a constant feature every day. So he essentially said that the Mexico and Canada tariffs will come into effect from the 2nd of April, not early March. Remember, these tariffs were supposed to go into effect from the 2nd or 3rd of March, I think. And now he's saying, well, they've been pushed out. They're in negotiations with both countries, and they're hopeful of maybe reaching an agreement of some sort. Tariffs will go up, but how much, etc.? Will it be watered down? That's the indication that you get from this. In terms of Russia, Ukraine, the conflict which is going on, day before yesterday, the news broke that Trump is essentially negotiating with Ukraine for access to their rare earth mineral resources that Ukraine has in exchange for some sort of assistance. Last night, Trump confirmed that Ukrainian President Zelensky will come to the White House on Friday and sign the minerals deal, which gives U.S. access to develop these sites in terms of rare earth and other minerals, etc. Russia, of course, is saying that any of this deal is contingent on a peace agreement first, so we'll see how this one evolves. And of course, day before yesterday, Trump also signed an executive order which opens an investigation on copper imports. Now, there's no timeline to this. There are about 200 plus investigations into these copper imports. So it looks like it's going to be a long outstretched one, but copper prices had in fact reacted a little bit in response to this. I mentioned US growth fears, and this essentially, remember, US services PMI number was weak. You also now have the Conference Board Consumer Confidence reading for the month of February, which is coming lower. And in that data, the 6-month ahead expectations measure was also weak. And I think this is the main reason why you've got yields, bond market, bonds rising and yields actually falling. So, I mean, actually, the overall picture is nothing exuberant. It's the continuation of what we've been seeing since last Friday in the US when we started to see a bit of a pullback. Levels here then, so Nifty, of course, on Tuesday, which is the last session, ended lower, and of course, no signs of reversal yet. Support on the Nifty comes in at about 22,396. Just about 150 points away. Resistance at 22,740, which is the 40-hourly average, and the swing high, which is 23,050. Bank Nifty similarly ended lower, but flattish actually. Support comes in at 47,844. Resistance comes in at the 40-hourly, which is 40-day exponential average, which is 48,909, and then the swing high, which is 49,628. Gift Nifty will give you a quick sense of how we are likely to start. About 5-point change. This is similar to what we had on Tuesday morning, but of course then we were going into a holiday. No such thing today. We are full of news flow and lots of headlines as well. Rima.
Indeed, Tuesday was a very quiet range bound. The Nifty moved in just about 110-point range but managed to defend 25,500. Well, on Tuesday, it's more of the same. The FIs continue to be net sellers. They sold 3,500 crore in the cash market. Domestic institutions turned out to be buyers, buying close to about 3,000 crore rupees. Well, today is the Nifty February series expiry, and this would mark the 5th consecutive series where we are likely to close in the red. And the last instance of 5 straight months of negative returns for the Nifty happened 28 years ago in 1996. And in the last 5 series, I think the Nifty is down close to about 14%. 2 sectors to watch today, and we'll get to them in detail as the show progresses. The first one is cables and wires, because Ultratech Cement has announced its foray into that. So is this going to be another Birla Opus Paints kind of a moment disruption for the sector? So watch for stocks like Havells, Polycab, RR Kabel and the rest. And the second one is the NBFCs, because the RBI has gone back to 100% risk weightages for the A-plus NBFCs, the A-rated NBFCs. So stocks like Bandhan Bank, etc., have been identified as potential beneficiaries of that.
Well, looking at the US economy, there is some weakness in terms of data. Yeah. I don't think it's so bad unless the US economy is going to bomb out, because the yields have come down, the dollar index as well is a little bit soft, and the talk was that US was getting a larger share of the flows. So if it's a little bit weakish, I don't think it's so bad. Well, as you mentioned, today is the weekly expiry, and we're going to be ending the series for the 5th straight time in the negative zone, which hasn't happened in multiple years. And I'll tell you what, looking at it positively, when the last time when we had 5 negative months, that was in 1996, the following month we had a good return. The following 6 months as well, the returns were very, very good. And the next 12 months were very, very good. And we know what happened from there on. So look at it positively, in terms of some kind of positive twist I was trying to give that one. The last time it took place was in 1996. Now, moving to the rollover picture. Well, the rolls are still much lower. Could be because of the truncated week. But the rolls both on the Nifty as well as the Nifty Bank are relatively lower in comparison to what we saw in the January series. So there is a fair bit of action we're looking forward to. So keep an eye out on that. Moving to what did the FIs do? Well, after a while, they added more longs than short positions. And now, the long positioning is actually at the highest you've seen in multiple weeks. I think the last time you saw the FI long positions at these levels was, 5th of February. So the longs outweighing the short positions, that's a bit of a positive. Let's see whether it reflects in the index movement, but that's a positive. Since it's the monthly expiry, we're looking at 2 strikes, 22,650 call, 22,600 put. Both of them were fairly active in trade, and the premiums as well up for you on the screen. Punching in the levels, punching in the recent technical zones that we have visited on the downside, it seems that the range is around 22,450 on the downside in terms of a support, and 100 points higher is the resistance mark, because we have tried to visit this 22,650 to around 22,600, but we haven't got past that. So that's the important range for today. The Nifty Bank is going to be very, very important. What was good in the previous trading session was at least we made a little bit of a higher high, and we made also a higher low, which was encouraging after the last few trading sessions. So that's good. You'll want that to continue as well. You'll have to bet on the Nifty Bank, fighting back for the bulls if there is going to be a fight back. So the Nifty Bank is the one to track. In terms of levels that you're looking at the Nifty Bank, keep an eye out on both these two. the high as well as the low in the previous trading session. Now, the RBI, well, they have cut the weight on loans given by banks to NBFCs as well as MFIs. This is a positive move with regard to liquidity. But more than stock-specific action, the tone that is coming from the new RBI governor is positive. There has been rate cuts, forex swaps, OMOs, and now, in fact, cutting the risk weights on bank loans given. So the tone is more accommodated in that sense. So that's a positive as well. The RBI governor is doing this, and the results of this will flow through in the coming months as well. So the economy appears to be in a pretty good pace. The stocks that we're looking at, Ultratech Cement, they're diversifying. Maybe some bit of worry on the asset allocation front. We'll see how that goes. But otherwise, the cables and wires players, well, they'll be a little bit nervous knowing that a big player is coming into their space. So all of them will be in focus as well.
All right. Nigel, thanks very much for that. Well, let's welcome in Prashant Paroda, Portfolio Manager, Emerging Markets at Allspring Global Investments. Prashant, good to have you with us here. And thanks very much for your time. So, as someone was, I think it was a meme. It was a picture out of Interstellar, and I think when the actors are stuck on a planet, and said 1 day is equal to 7 years. 1 day in Trump land is equal to 7 years under any other president. I think it's absolutely true, right? Staggering amount of headlines, news flow, but what directionally, what is all of it pointing to? Higher markets, lower markets, more US outperformance, or will that start to fade?
So I think clearly the big date that's coming up is April 2nd, I think, which you talked about. And he was today in the cabinet meeting, President Trump was talking about reciprocity being big in this new agenda that he has. I think some of the concern of the market is just uncertainty with how he's going to first do with the Mexico-Canada tariffs, and then he wants to deal with reciprocity across the globe. So I think the markets are going to be range-bound. I think one of the interesting comments that I'm sure you guys have caught as well is they're focused a lot more on the 10-year. The 10-year has eased a bit, which helps sort of the housing industry and mortgage rates in US. So I think right now, only one man knows, which is President Trump, how things are going to behave on April 2nd. But the market does expect some kind of tariff activity post that.
Prashant, just one quick thing. He's delayed Mexico and Canadian tariffs to April, right?
Yeah. So
what does that?
I think
what does that mean? Is that negotiation? Still negotiation? Should we go back to believing that this is all negotiating tactic? Everything is up on the table, as opposed to I think the consensus was that he's got the mandate and he is serious about it. It's thought out, and tariffs will go up substantially, and markets are underpricing it. Which is it?
I think right now, with Mexico and Canada, there's the national security angle that he's playing as well. So I think it remains to be seen whether he's happy with all the steps that Mexican and Canadian governments have taken with that regard. So I think there was an interview with the Commerce Secretary as well, where he talked about they're still negotiating. So I think it will always be a game time decision with regards to Mexico and Canada as well. But apart from that is, reciprocal tariffs across the globe that will take into effect on April 2nd as well.
And next on the canvas will be EU with 25%. His words were, it will be 25% generally speaking, and that will be on cars and all of the things. But Prashant, come in the argument between India and China. When Trump took over, everyone thought, well, it's going to be negative for China. Expect big tariffs. There was talk about 60%. But look what's happened since. This year itself, the MSCI China index is up 16%. Money is flowing into China tech, while India is struggling. FI exodus continues. So what's happening on the India versus China debate?
So I think with China, a lot of the expectations they had a run of almost 3, 4 bad years, and a lot of the expectations were way downbeat. And then there was this deep seek moment where people realized that Chinese continue to work on new technologies and try to kind of challenge the U.S. field itself. So I think a lot of the activity in the Chinese names has come from the tech side and from the deep seek, where people expect some kind of boost to cloud revenue going forward for a lot of these hyperscalers in China. I think longer term, though, India still remains a very important structural market for FIIs. I mean, this year seems to be some sort of digestion year where somehow the earnings expectations were pretty high, and a lot of the companies are not kind of meeting those expectations, and valuations have corrected. But even within Indian markets, I think you see a lot of divergence, right? So you see some of the financial names, some of the that hadn't performed the last 3, 4 years, they're getting a bid now. And some sectors, such as cement, seem to be doing a little better. So I think it's a very selective market for India in the near term. And it remains to be seen what Trump does with China, because right now it seems he's more focused on Mexico, Canada, and some reciprocity. And also Zelensky is coming in town to sign the trade agreement. So I think dealing with China is kind of later on the table for President Trump.
All right. Hi, Prashant. Good morning and good to see you. And Prashant, just going by the data point that you made, that cement is looking pretty okay. Actually, a lot of economic indicators here in India are looking good. Whether you look at the power consumption, you look at the cement, steel movement as well, credit growth is pretty okay. Given the recent underperformance of the Indian markets, do you think there's a strong case for the Indian markets, say, in the 12 months down the line to actually outperform on? Because we have gone through a period of underperformance, both in comparison to the developed markets like the US, in comparison to the Chinese market as well, which bounced back from multi-month lows. Is there a case for India to outperform from here on?
Yes, you can definitely make the case, and especially selective financials, selective cement industries. I think it's just become a game of expectations, where you'll find a lot of these companies, and the market leadership has changed a bit. So it's okay to kind of focus on companies with sort of muted near-term expectations, where expectations can beat, and those stocks will start outperforming as well. So I don't think you can count out India at all, and this could be just a near-term phenomenon. And once April 2nd is out of the picture, all investors will recalibrate, what it means for each country as well. So I think right now investors are in a wait and see mode till they get more clarity from the White House.
Prashant, just 30 seconds. US data recently, PMI, the Conference Board consumer expectations data, they're all sort of pointing to some softness. Would you pay attention to it? And what does it mean for IT services here in India? Stocks have been weakening last 2 days. Yeah.
Yes, I think there is some sort of weakness in there. And then there's concern about what tariffs will do to inflation. So some sort of consumer confidence numbers have weakened a little bit. But again, we don't know the full clarity of how things will develop. One thing to note is we didn't talk about the budget deficit in US. So the budget deficit, at least what's been approved by Congress, now it will go to the Senate, still talks about a pretty big fiscal deficit number. So I think in the near term, even though Elon Musk and the Doge initiative is still working on cutting the deficit concerns are still there. From an investor perspective, and more clarity will be seen towards the end of the year.
All right, Prashant, thank you very much for joining us. Good conversation as always. Thank you for being here. Let's just quickly run our viewers through what's sort of lined up here over the next 2 hours, 2.5 hours or so. So 8:35, we'll hear from the management of Sirma SGS. We discussed the quarter gone by. More importantly, the outlook going forward. Mr. J.S. Gujral will be with us. 9 o'clock, you'll have the PNB Paribas financials analyst for an outlook there. 9:20, Manishi Chaudhary of Emma Capital Partners will talk markets. 9:30, KEI Industries and Mahesh Barang of Centrum. Well, Ultratech's entry into the wires and cables space, what does it mean for existing players? We'll have George Alexander Muthur of Muthur Finance speaking with us at 9:40. RBI approval to open 150 new branches. 9:50, Umesh Chaudhary of Titagarh Rail Systems on the outlook going forward. And of course, our special segment, Indianomics, Lathan Conversation with a host of guests to discuss NBFC and MFI risk weight cuts and the prepayment penalty waiver. Stay tuned.
All right, time to slip into a short break, but we've got a lot of stock-specific action to track for you on the other side in our special Top 10 segment. We're looking at Vesuvius India, Dr. Reddy's Laboratories, and Mastech. They'll be reacting to positive news flow, while you have Ultratech Cement, cables and wire stocks, NBFCs, microfinance stocks, Azad Engineering, Prestige Estates, ONGC, and Oil India that will be reacting to negative news flow. Stay with us.
Good morning. Welcome to Thursday's edition of Bazaar Morning Call. The GIFT Nifty is suggesting a muted start, a flattish kind of an opening. 13 points up right now, but lots of individual actions will dominate today's trading session. Our research team is standing by with CNBC-TV18's list of top stocks for the day. And Nigel, let me start with you. Ultratech Cement, that's the big one.
Well, that's right. Surprise, surprise. Ultratech has announced that they're extending their presence in the construction value chain. By that, they mean that they're making their foray into the cables and wires business. The total capex that they've laid out is around 1,800 crores. They're going to be setting up a facility in Bharuch. In the next 2 years, they expect operations to commence. That's by December 2026. What attracted them? Well, the industry itself has been growing very, very well in 13 to 14% or thereabouts. Industry size is expected to go from 80,000 crores to 1 lakh crores or thereabouts. And also maybe some kind of benefit with their RM sourcing, raw material sourcing, aluminium, copper from group company Hindalco. They're looking at focusing on strengthening their building products division, which is known as Ultratech Building Solution. And they already have close to 4,400 outlets. Margin-wise, well, the margins will be relatively lower, but the ROC on cables and wires is relatively better. So that's the mixed bag coming out of there. What the street will not like, though, capital allocation was. That could be one factor that will weigh on them. And the other factor is, some part of the street believes they could have done it under Grasim. How do the numbers stack up? They're going to be putting 1,800 crores. The revenue potential will be 7 to around 8,000 crores with margins in the vicinity of around 11 to around 12% or thereabouts. For them, the total capex is only around 10% of their annual capex. So very, very small. And as we know, the operating cash flows per year for Ultratech is more than 10,000 crores or thereabouts. Jefferies, they highlight there could be a capital allocation concerns, but they say if there's a knee-jerk reaction, it provides a buying opportunity. Expect the stock, though, to open up in the red because of this diversification away from their non-core business, that is, towards a non-core business like cables and wires. But Upasana, your companies may feel the heat. Suddenly you have a new player in there, and the fear is this the pains moment for the cables and wires guys? Give us a quick analysis.
Certainly, Nigel. Now, cables and wires space will be in focus today with the entry of Ultratech as competition may intensify for the existing large players. Mind you, Birla Group has a strategy to remain in the top 2 position across the business verticals it operates in. Now, if we look at the FY24 market share of the top players, Polycab stands at 26%, KEI stands at 12%, followed by Havells, which stands around 11%. Now, in terms of valuation, the current multiples of the existing players are on the higher side, but 20% off its peak seen 6 months back. Now, looking at the capex plans of majority players, they are on the higher side is what they have highlighted in Q3 FY25 as well, giving a higher capex guidance for upcoming years. Hence, the margins of these companies will also be in focus of how they scale it up going forward. Now, Jefferies believes that they foresee a lower impact on Polycab as compared to the other housing and B2C players like Finolex Cables and Havells. And lastly, Morgan Stanley believes that the new competition is certainly a surprise, but not a concern going forward. Hence, all these companies will remain in focus, and I expect all of them to open in red today.
All right, Upasana, thank you very much for that. In fact, we have the management of KEI Industries joining us to talk about this, and we'll get their perspective. We'll also have Mahesh Badang of Centrum Broking to talk about, the other side, right? What does it mean for Ultratech for a diversification like this? So that's coming up at 9:30 this morning. NBFCs and MFIs in focus, some reprieve, some relief, maybe? Abhishek is here with that. Abhishek, morning.
Well, largely to do with the NBFCs as well as banks loans to NBFCs. So that will be in focus, not the NBFC MFI, because this rule of, relaxation of risk-weight asset that RBI has put out is largely for bank loans to, NBFC MFI players and not for NBFCs lending to the MFI sector. So RBI has reduced risk-weight requirement for lenders, given the fact that if you take a look, the banks, loan growth to NBFCs has come down from around 30% YY loan growth that it was prior to November of 2023 to right now, as of December, it was just 7% on a YY basis. So this has or might have given some, good feeling to RBI that it's time to reduce the risk weight asset requirement that they had actually increased in November of 23. So they have restored or reduced the risk weight asset requirement for lenders, microfinance loans by 25%. So if a bank has loans to microfinance segment, that RWA requirement has been reduced by 25%, and bank loans to overall NBFCs also will reduce by 25% with respect to risk weight assets. So we have IFL Securities note which states that 7 to 170 basis point of CET1 benefit is seen for lenders, especially banks. So higher benefit for Bandhan Bank, Bank of Baroda, Ujjivan and IndusInd Bank. Back to you.
Thank you for that. But Abhishek, you're also watching Azad Engineering.
Well, sources tell CNBC-TV18, Rima, that Azad Engineering has launched a QIP. The issue size is about 700 crore. Issue price is about 1,280 crore, which is at a discount of, 1.8% to SEBI floor price and about 5.6% to Tuesday's closing price. So equity dilution would be around 8.5%. The promoter lock-in post this fundraise is about 60 days, and the BRLM to the issue is ICICI Securities and others. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Let's hop across to Vinny. She's here with some more stocks and news. Morning, Vinny.
Good morning, Nigel. So firstly, let's start up with Dr. Reddy. We're expecting green on the screen for this one. US FDA has concluded the inspection at its Hyderabad API manufacturing facility, which is an important one for the company. API accounted to around 11-12% of the revenues in FY24. While obviously this is an EIR, which is Establishment Inspection Report, coming in for this facility with a voluntary action indicated. So positive sign for this one. No major concerns coming in here, and that is why a green. Prestige Estate, on the other hand, we're expecting red here. The Income Tax Department has conducted some search operations in its registered offices as well as branch offices. That was on February 25th is when they started it, and the details of the investigation are still pending, but the impact of the financials is also something that we're watching out for. As of now, the company is cooperating with the Income Tax Department, but this will be key to watch out for if there's going to be any major financial impact coming in on this front. Lastly, we have Mastag that is also in focus. They've secured a multi-year, multi-million-dollar contract. This is from the UK Public Service Department. The estimated value of this is around $85 million spread over a period of 2 years. So keep an eye out on Mastag. We're expecting green here as well. The stock had seen a decline of 22% on a YTD basis. Positive sign is what we could see here.
Okay, all right, Vinny, thanks a lot for that. Well, I'm looking at Vesuvius India, and the numbers actually were mixed because on the top line, you had a super growth of close to around 23%. Good going out there. However, the margins came down to around 16% or thereabouts. Remember, for a brief period, we had margins at 19 to 20%, so they've cooled off a little bit. The problem was in terms of the gross margins, which did see a contraction. So that's why we have the EBITDA margins as well that did come out. The profit number, though, was a little bit higher. That's because the other income was more or less flattish, and the effective tax rate was relatively lower. The kicker for the stock was that, in fact, they've announced a stock split, so now it will become more affordable. High amount of participation could be there. Going with the tinge of green on this one, though the numbers were more or less mixed. Well, let's hop across to Manisha. She's here to tell us about ONGC as well as Oil India. Morning, Manisha.
Morning, and thank you for that, Nigel. Well, I'm looking at crude oil prices because we've seen a very sharp decline come in for this one, so much so that we are now trading below $69 a barrel for the U.S. crude oil prices. That's a 2-month lows, and with this, not just that we've broken below 70, but the trajectory clearly seems on the weaker side. Two things to watch out. One is U.S. and Russia conversation, where that war seems to be now taking a step forward in sense of peace there. And if the Russian supplies start coming into the market, well, you could be looking at higher supplies then. The second thing is about the U.S. crude inventories, which also have surged, and markets do believe that the tariffs, if they do come as the conversation continues to be reiterated, then you could be looking at the Chinese demand going down and the economic slowdown leading to further decline in fossil fuel demand there. So these are the three factors that are weighing onto the crude oil prices right now. We are looking at a negative in sense of crude prices for this year also, down by nearly 4% YTD.
Manisha, thank you for that. Here's a quick recap then of the top stocks this morning. Stocks with positive news flow are Vesuvius India, Dr. Reddy's, Mastech, NBFC's, banks, microfinance stocks. Stocks with negative news flow are Ultratech Cement, Cables and Wires stocks, Azad Engineering, Prestige Estates, Oil India and ONGC. We will slip into a break on that note. On the other side, we'll connect with Dipan Mehta for some fundamental stock talk. We'll also have the management of Sirma SGS joining in to discuss the quarter gone by and the outlook going forward.
Welcome back. You're tuned into Bazaar Morning Call. As promised, Dipan Mehta, Director Elixir Equities, joins us on the show. Hi, Dipan. Good morning. Good to see you in. Dipan, I had a busy, holiday yesterday actually because had to go through this deal with regard to Ultratech. All of a sudden saying that cables and wires is the space we want to be in. What's your initial reaction to this? There could be a knee-jerk negative reaction on Ultratech Cement because it's not in their core cement business. And also, do you think cables and wires players will feel the heat? Though you need to keep in mind that paints companies were trading at 60 multiples. These cables and wire business are at around 30 multiples. So in that case, that could be some cushion. Your take.
Yeah, good morning, Nigel, and thank you for having me on your show. I think that it's not a very big, serious diversification for Ultratech. We need to understand their reasons for getting into this particular business. See, when they went into paints, they went, completely inside, setting up several plants and making massive investment, that too through Grasim. But in this case, it's a small 1,800 crore capex plan. As I heard from you, it's just 10% of their overall capital expenditure plan. And it's not going to be such a big venture for them. And we need to understand what exactly the thinking behind the cables and wires entry for this particular company. But I don't think it's going to impact any of the existing players. I think they have very strong brands, a distribution network, relationships. A lot of them are very good exporters as well. So it'll take time for it'll take time for Ultratech to catch up, if at all.
Okay, all right. So you're saying that if there is weakness in some of these cables and wires business, it'll be a good entry opportunity. Is that what you're trying to tell us, Dipan?
See, I still feel that these cable companies are trading at very rich multiples, considering it is a type of a cyclical business and there's volatility in earnings. Raw material costs do impact their operating profit margins. But sure, I mean, if there's a correction, one could look at these companies if you are fundamentally very comfortable with the valuations. But by and large, our preference is for consumer-oriented businesses or consumer appliance companies. And within that, I think Havells particularly comes to mind, which has got a cables business, but has a solid air conditioning as well as other home appliances business. And if that valuation comes at reasonable levels, I think it could be more appropriate than some of the other pure play cable companies.
So Havells, but just one more question. Would you have preferred that they have actually done it through Grasim rather than Ultratech?
Yeah, I would agree. So, I mean, because Ultratech is a cement company, India's largest cement company. And sometimes when you want an exposure to a pure play cement company, you would go to Ultratech. But now you have this cables division also within Ultratech. But as I said, it's just going to be a very small division. And over time, the management will explain the logic of getting into this particular business.
But one thing is clear, right? Yeah. All industries are seeing, it's not disruption, but newer players, hospitals, all these conglomerates coming in. Paints, Ultratech first, and now JSW, and now, of course, the cables and wires.
The biggest beneficiary could be consumers, and because ultimately earlier there was this unwritten rule that I will not get into your space, you will not get into mine. Yeah. But now that's clearly broken over the last few years, and that could bring pricing down, which will ultimately be good. So,
and on the
interesting
question, I don't know if you have the number, what percentage of the cables and wires segment is unorganized?
That's 30%. So 30%? The total industry is 80,000 crores, approximately 30% is unorganized. So that could 26 to 30%, roughly.
Yeah. So the point is that, sometimes we think that a large company enters the space and it's bad for existing players. Yeah. But if a large segment is unorganized,
then it could.
Then it doesn't necessarily need to hurt. Yeah. Many of these cable and wire companies, when we speak with them, have guided for 15-20% kind of growth rates, right?
Yes.
So it's not necessary that the entrant is taking market share away, although it will in some degrees. The margin incrementally is negative, but it's not necessarily in that sense hugely negative over a period of time. Today, of course, stocks are another matter. Deepan, banks and financials with the RBI cutting risk weights. There is, of course, a significant shift, as we are seeing. I first started sort of mentioning this when we started to see the rupee depreciate, so on the forex management side, and now we are starting to see some actual measures as well. Your thoughts?
Yeah, I think that, Prashant, after several quarters, maybe years of underperformance, you may see banks having a cyclical upswing and improvement in their earnings. Base effect also will benefit them because provisions had been increasing for these companies over the last 4 or 5 quarters or so, and now perhaps they will flatten out, and core pre-provisioning operating profits also may start to look up. So you would see, I would say, year-on-year growth in bottom line and a cyclical upswing in stock prices. But 3-5 year period, our view on banks is slightly cautious. It's becoming a bit of like a red ocean, and there's going to be pressure on net interest margins. The minute these banks start to lend into high-yield products like personal loans or microfinance, their NPAs are going up after a few quarters or so. So some additional risk factors are coming in. So while we're heavily invested in banks, 25-30% of our portfolio, and we would remain invested for the next 4 or 5 quarters or so, but over the longer period of time, one need to have a proper kind of a strategy to be underweight in banks.
Deepan, request you to stay on. We've got the first management joining us on the show, and that's Syrma SGS. Now, they reported the numbers a while back. It was a strong quarter. We saw a revenue growth. There was an improvement in margins. And the company says that they're confident that they will grow in line or beat the industry growth rates of 30 to 35%. J.S. Gujral, MD at Syrma SGS, is now joining us on the show. Mr. Gujral, thank you very much for joining in. Good morning. This is Rima here. So first, just to get some numbers out. For FY25, you were guiding for 4,500 crore of top line and 7% plus EBITDA margins. That stays, right, as we are close to wrapping up the year?
Yeah, I think, thank you very much for having me on the show. I think we are in line to achieve the 7% EBITDA margin. And the top line could be marginally here or there because if the product mix changes, if the consumer business goes down, the top line goes down, but it has a positive impact on the EBITDA margins. So we stand by the absolute numbers of EBITDA margin, which we had guided, it was 300 plus 310 crores for the current year. And we are in line with achieving that.
Okay. And revenue should be close to 4,500 crore.
I'm not committing 4,500. It could marginally vary because if my product mix varies, the top line varies.
Got that. Okay. What about FY26? What is the outlook? You've got the Pune plant, which is commissioned. It will start generating revenues as the year progresses. So what is FY26 looking like in terms of top line and even on the EBITDA margin, since you are focusing on higher margin businesses and products?
You see, for the FY26, I think we are in line with what we had guided, that we grow at the industry average or plus industry average, which is 30-35%. And this year we'll achieve a EBITDA margin of 7% or little more than 7%, which guides us that we should be achieving around 7.5% next year. The Pune plant has started, it has been commissioned. It's undergoing approval from the customers. So in a business like us in automotive and other things, after you commission the plant has to be approved by the customer, and that's a 3 to 6 month cycle. But I expect that next year, 9 months, we'll have revenues coming in from the Pune plant.
Okay, all right. Hi, Mr. Gujral. Good morning and good to see you in. I wanted to ask you about, how you're seeing order activity. Is there any kind of slowdown that you're experiencing? So that's point number one. And point number two is around 35% of your order book is consumer facing, right? So how do you see revenue recognition from this part of your business? FY25 and then FY26. I think it's around 35 to 40% or thereabouts.
See, for FY25, we had guided a consumer business contributing about 40% of our revenue. And I think we are in line to achieve that. 1% here or there, it could be there. Next year, we are targeting that the consumer business should come down as a percentage of my total revenue. Our wish is it should come down to 35%. Whether it is 35 or 37, I really can't say today. But the wish and the sort of the strategy of the management is to focus on growing the high margin business. And once the high margin business grows, even if the consumer continues to grow, as a percentage of the total sale, it will come down. We are targeting it should be about 35-37% in FY26.
Okay, all right. And there is no big slowdown in terms of ordering activity. Is that correct?
There is no slowdown as such on the ground, but the general ecosystem is one of caution. You see, with all these global events taking place, I think it will be a while before the dust settles down and people start taking forward calls, long-term calls. Currently, it's America with all the tariff wars going on and everything. It's a sort of a caution in the minds of the decision makers.
So talking about the global uncertainty, exports were 23% of your revenues. You wanted to increase it to 25 to 30%. But there is that slowdown in Germany also. So on exports, what kind of a year will FY26 be? Will you still see that 30-35% growth rate that you expect for the consolidated business, or exports will be slower? And what could the revenue contribution increase to?
The exports in FY25-26, I expect them to grow about 20%. This year has been a subdued year in terms of exports because Germany was really down. And the contracts which we got from the USA, they are kicked in only in the second half, or rather the third quarter of this year. Next year, I expect the exports to grow, and I think it should cross the 1,000 crore mark. And what we are strategizing is adding more customers, which we have already added, and they're coming on stream in FY26.
Okay, all right. Another important factor for your company as well as for the industry is the PLI benefits. So how will these PLI benefits accrue for your company in FY25 and FY26, if you could quantify it?
See, PLI benefits for our business is only for about 30% of my revenue. My total consumer business is about 40%, out of which the PLI business may be 30-32%. So the 68% business or 70% business is not dependent on PLI revenue. And for the current year, we will account for about 18 to 20 crores of total PLI benefits. And going forward, also, it will be about the same figure because PLI is already approved. The CapEx is already approved. The incremental revenues we have to do. So there is no scope for significantly increasing the PLI revenues because there's a cap on the total sales which we can do, which are covered under the PLI. But as I said, 70% of my revenues are non-PLI related.
Quick question, Mr. Gujral. In the next 3 to 6 months, do you think you'll raise money via the QIP route? Because you've got an enabling resolution.
See, we have an enabling resolution that was essentially if we have to do some inorganic acquisition, which we are always looking at. And the philosophy of the management for the inorganic acquisition is that it gives me access to certain technologies or certain regulatory approvals, which I don't have in my company today. For my organic growth, which I'm projecting, I don't really need the funds. So it was an enabling resolution that should the opportunity come in for an inorganic acquisition, then we access those funds. But for my organic growth, I really don't need them.
Right. So good morning, Prashant here. Just one briefly, if you can tell me, you said it'll be a while before this dust settles. The uncertainty is on with regards to what? Demand uncertainty, or whether, basic considerations like where to manufacture and those kind of things?
Yeah, hi Prashant. See, when the tariff things which is in the news on the front lines every day, I don't think on the electronic part the tariffs will be that significant, or they will be material. But till that thing settles down, we have to re-strategize. For example, if a 5% tariff comes in on my exports to America, we have to re-strategize how do we do it. So
sorry, you may have...
Orders for 25, 26 are firm. It's a long-term thing which we have to strategize. That is beyond 26.
I see. No, very helpful. Thank you very much, sir. Appreciate you joining in, and good luck. And we hope the tariffs are sufficiently low. But we'll have to see, and we'll know when we know. Thank you for joining us with that perspective.
Always a pleasure. Always a pleasure.
Deepan is still with us. Deepan, you heard that conversation from Sirma. I mean, a stock-specific takeaway of the EMS space.
Prashant, I was just checking while you were interviewing the management. The stock is off 40% from its peak, and it's a blue chip company in a very high growth space. I think valuations have also come off. If you analyze their fourth quarter earnings, then it is trading at a P multiple about 38 times or so. And management seems pretty positive that they can sustain that 25% type of top line growth. It does appear to be so based on the order book as well. So I would say that this is a good time to get into EMS companies like Sirma. There are anyway very few pockets where there is sustainable secular growth, and EMS is one of them. So considering the kind of position of the management and the risk return profile, definitely I think Sirma SGS looks like a good buy at this point of time.
All right, what we'll do is we'll take a quick commercial break here. Deepan, stay with us. We're going to come back. We'll also get some price action in focus with some trades. Sudarshan Sukhani and Mitesh Thakkar in focus on the other side. Welcome back. 9 minutes to go for the pre-open session. We have Sudarshan Sukhani and Mitesh Thakkar who are with us with price action and what to expect. I mean, the only big price action globally over the last 2 days that we're reacting to, of course, is US yields, which are down 15 basis points. I mean, there's a very sharp sell-off. Otherwise, I mean, equities are slightly down. Dollar's not moved very much. Oil, though, is down about 2.5%. GIFT Nifty is flat. Mitesh, to you first. What's the trade here? What would you do? Flattish kind of day, of course, going into the holiday on Tuesday. On the indices first, and we'll talk about stocks.
Morning, Prashant. On the index, I maintained that the market has kind of reduced the intensity of the decline, but still no sign of a reversal has taken place. I think the first sign will come in case we start capturing 22,700, 720 zones. Till then, I think it's a market which I would want to sell around those levels. And 22,500 and then 22,350 are my two targets on the downside. So it's a market which is declining slowly, but let's see if we get a reversal as yet. Similarly, on the Bank Nifty, till 48,800 is captured, I think I would maintain a slightly or mildly negative bias.
Sudarshan, good morning. Thanks for joining in. What about you? What would your sort of bias be in that sense as far as indices go?
Well, good morning. I think after a long time, it is possible that the Nifty is giving signs of at least a short-term low. Now, it's too early, but it's worth finding out whether that is a valid proposition. And for that, I think today would be a day when we want to buy. We keep a stop at 22,400. That's a decent, place giving enough room for the Nifty to make some volatile moves. Remember, today is also FNO expiry. But with that caveat and stop, I would be a buyer in the Nifty. There is a very decent basing pattern for the last 3 days that's valid for swing traders and short-term traders. Maybe that works out. So, but the bias for the Nifty is clear. Look to buy it today.
Look to buy. And what about stocks? Would your bias be towards buying individual stocks, Sudarshan?
Yes, then there are a lot of stocks which are giving similar patterns. For now, so many times these patterns have failed in this mini bear market. But we'll just have to take the trade and find out. ABB is a buy with a stop under 5200. Grasim is my only intraday short with a stop above 2420. Nestle is a buying opportunity, again a basing pattern there, stop under 2205. And Volta, similar sharp correction, small sideways pattern, possible up move. So Voltas is a buy with a stop under 1250. So my bias is clear, 3 buys and 1 sell.
Nestle, Voltas buy, a sell on Grasim. Mitesh, what about you?
I have a mix of buys and sells. On the buying side is Ashok Leyland. It's a stock which I've recommended many times in the last few weeks, purely because of the fact that this is one stock which is showing signs of maintaining an uptrend in a declining market. So for the time being, buy with a stop at 223, targets of 236. A similar story, or even the stock is making new highs, is happening on the charts of Bajaj Finance. So that's a buy with a stop below 83.95 for targets of 8,700. And on the sell side is LIC Housing Finance. Keep a stop at 531. Look for targets of 500 here. And IDFC First Bank is a sell with a stop at 60 for targets of 55.
Okay, all right. Gentlemen, thank you very much, both of you, for joining us with that. Mitesh and Sudarshan, we'll talk again soon. There's a flash at the bottom of the screen. There's a 255 crore order for Jupiter Wagons, which has come through for some 9,100 odd wheel sets. We'll take a break. We'll be back with the pre-open session. We'll also have Santanu Chakrabarti of BNP Paribas to talk about their call into the financial space. Lots of news flow recently as well. Stay tuned. Okay, welcome back. Let's just look at the, okay, so 16 minutes to go for the market open, but I think we're 2 minutes away from the pre-open session. Deepan is still with us. Deepan, thanks for staying on. Now, I just want a quick word on Religare, right? We had last week, we had that big, I think it was a massive move, some 15, 16%. I think it was last Friday, I think. And then from there, it's corrected quite a bit, back to about 236. So high that day was a very sharp move. Yeah, it was that Friday. 267 was the high. We're back at about 236. Any thoughts here?
See, Prashant, at least one uncertainty is out of the way now that they have a new promoter in place and the Dabur Group has got deep pockets. And this is a business which requires capital from time to time, which they can certainly subscribe or arrange for the company. But, gradually, I think the overall business momentum as far as wealth managers, mutual fund distributors, insurance companies, all the capital market players, I think they've had 2-3 very good solid years. And you could expect a cyclical softness within that sector. So from that point of view, to be a bit cautious on the entire industry. And I have actually not studied Religare that closely and what are going to be the actually moving parts which will take the revenues and profitability higher. So I would just say wait and watch. Let's see how the business evolves. And then perhaps you can take a call on Religare.
Okay, all right. Deepan, I wanted your view on the two new entrants into the Nifty in the next 1 month or so, Zomato and Jio Financial. Now, both of them, from the peaks, they've seen a good correction. Now, there could be some kind of allocation because obviously when you're adjusting yourself and coming into the Nifty, what's your view? Zomato has come off considerably, as is the case with Jio Financial, which bulk of its SOTP comes in because of its holding in Reliance. Your take?
Yeah, Nigel, I'm a bit surprised with the inclusion of these two companies, but nonetheless, I think Zomato, our view is very positive. We have a long-term view on the long-term positive view on Zomato, and it's kind of part of our core holdings as a measure of disclosure. We want to own it for next several years or so, and do feel that it can give great returns. Can't they say the same for Jio Finance? A bit disappointed with the kind of growth which has come through since listing. And look, again, it's a very competitive space. And I would say in terms of valuation, there are better plays within the NBFC, like say Bajaj Finance or the Cholamandalam. And I'm not sure that Geo Finance will be able to scale up as well as a lot of people on the street are expecting.
Deepan, I don't know if you tracked this one. We don't actually talk about it at all, but there's a stock called E2E Networks. L&T had bought stake, if you remember, right, in two tranches. One tranche was around 3,700. The other one was about, I think, less than that. The weighted price we'll have to see. It's under 2,000 rupees now. Any thoughts here if you've looked at this?
Yeah, Prashant, we have had a look at it, and it's a great business, and they seem to be in the right place at the right time. Fantastic momentum when it comes to revenues, but look at the valuation. I think you need the stock price to half from these levels to justify buying into E2E. Yeah, I know. When you look at the price, also look at the PE multiple. I think it's trading at maybe 70, 80 times. I'm not pretty sure. You can pull that up. So at these valuations, I think a lot of the positives are captured. But keep these stocks under the radar. If a quarterly number comes which is surprisingly very positive, or the stock corrects significantly from these levels, and you get it in that sweet spot where the PEG, price earnings to growth, is about 2 times or 1.5 times or so, then that's a good entry point. But definitely a company worth watching. They seem to have a very different type of a business model, and as I said, I think growth momentum is very strong.
In the jewelry space, Deepan, right? After the sharp sell-off in Kalyan, there was some view emerging that, well, better to be with the one big name, Titan. On Friday, but last day, Tuesday, Tangamail was up 20%, circuit up. I don't know if you've got a view here.
See, I think what we are seeing is that after a long time, a lot of the tier 2 jewelry companies, be it Kalyan, Tangamail, and some of the other new listings, their growth profile is very much similar to Titan, slightly better as well. And they seem to have got a lot of their issues sorted in terms of distribution, growth, branding, so on and so forth. And now with the budget offering that no income tax up to 12 lakhs, definitely consumption is going to get a boost, especially discretionary consumption, and jewelry is one of it. So I'm very positive on the space per se, and definitely willing to look at some of the tier 2 players, including Kalyan and Tangamail and some of Senco Gold. And there are so many other at least 7 or 8 new listings which are there. And these companies, I think, are at far more reasonable valuations than Titan, where growth rates, frankly, have been disappointing for the past 2-3 quarters. So you could look at a shift out of Titan, some of the tier 2 jewelry companies, and that could be a good strategy for short to medium term as well.
Deepan, thank you very much for that. Let's focus on the financial space now. Shantanu Chakraborty, India analyst of BFSI at BNP Paribas, is now joining us on the show. Shantanu, the big takeaway over the last couple of weeks has been that the RBI has turned a little more accommodative. We've got liquidity injection, a rate cut in the prior meeting, and now the risk weightages for MFIs, etc., have come down back to 100% versus the earlier 125%. So that's been restored. So on the whole, in a nutshell, should one be incrementally more positive on the financial sector?
Good morning. Yes, absolutely. You have nailed it. So when I looked at the risk weight changes that they have made, whether it's for top-rated NBFCs or whether it's for MFIs, to put this prism of immediate growth would be actually a little premature, because frankly, if you look at NBFCs like Bajaj Finance or Chola, etc., where they're growing slowly, not really. I mean, the biggest beneficiaries of risk weight reduction in terms of banks' incremental willingness to lend to them, in any case, do not have a whole lot of dependence of their growth plans on such things. Similarly, if you go within MFIs, you'll realize that a lot of the reticence or reservations that banks have with lending to certain MFIs has to do with how they perceive the fundamentals of the MFI business today. But you have nailed it when you said that this is a critical communication of regulatory intent. Yes, there's been focus on liquidity. We have already seen rate cuts, and these are probably the first signs we are seeing of credit policy easing, and that bodes very well for the sector, both banks and as well as NBFCs. It shows that the regulatory focus is shifting from towards growth accommodative in a meaningful way, and that has to bode well. I absolutely agree with you.
So, Santanu, morning, Prashant here. Straight off the bat, before we talk about some of the more macro stuff. In your opinion, which are the listed players which stand to benefit the most?
In terms of these changes, as far as the arithmetic of the capital release goes, it obviously favors or has a greater marginal impact on with those who are nearest to the minimum capitalization red line. So you are thinking PSU banks. That's the first order impact. Second order, at least within the MFI space, those companies whose early warning signals on portfolios will start to look up will now incrementally get more funding from banks. So, the winners among the MFI space and most of the larger PSUs are probably the biggest immediate beneficiaries of this. But as you started the discussion by noting, ultimately, the change in this regulatory attitude, if you will, is probably beneficial for overall lending as a whole.
But should one expect, as you said, right, that banks are anyway a bit hesitant to lend to MFIs because of the cycle that we're currently in? So for, calendar year, say 2025, will there be an incremental increase in the lending rates? Will the cost of borrowing for MFIs come down in that order, or it's too premature to think like that?
The way one should think about MFIs, in my opinion, is that ultimately it's a fairly high yield, high margin business, right? So they are not so much worried about cost of funds. And today, if you go speak to any MFI CFO, the first thing they'll tell you is if they can lock up funds, whether it's 25 basis points cheaper or dearer, is not their clear priority right now. They want to build enough and more cushion within the balance sheet for the cycle to play out. How this regulation change helps is as the as the numbers start to settle down, as they will for specific geographies, specific MFI names over the next 3 to 4 months, what you'll see is the blanket risk reduction approach that a lot of banks might have gone with as far as MFI is concerned is going to become more and more nuanced. So those MFIs which actually do not get impacted that much by the specific geographies which seem to be under stress will be the earliest beneficiaries of the changes that you have seen today.
Any names?
So, obviously we are thinking about in terms of delta, you'll have to think of single name MFIs rather than banking MFIs because banks which have high MFI exposure do not have a liability side problem. They have their own deposits to deal with.
All right, Santanu, we'll leave it there. Thank you very much for joining us and running us through all of that. Appreciate your time here on CNBC TV18. I think we should be able to look at some of these prices, right? And how they're opening up. Maybe look at Bajaj Finance, Shriram Finance, Bandhan, Chola. So all of those should come up on your screens.
I think, Prashant, a clutch of stocks that are important. Some of these NBFCs as well as the smaller banking name that have got a relief because of this. Chola, you have RBL Bank, Bandhan Bank.
Bandhan for a bit.
Yeah, Bandhan's up 3.5%. But on the flip side, the paint moment for the cables and wires business. There is a knee-jerk reaction that we're seeing out there. Ultratech is down 1%. It's very small for them in their scheme of things. Only 1,800 crores. They generate cash flows of more than 10,000 crores per annum. They do capex of 9,000 crores or thereabouts per annum. So for them, it's a very, very small thing. For the time being, capital allocation, so it's down. But take a look at KEI, pull up Polycab, pull up Havells. All of them, they're getting a little bit nervous whether or not this is that moment. We'll have the management of KEI in just a bit. But for the time being, these guys, they're nervous.
And it doesn't help, right? They're all trading at punchy valuations of 40 times, etc.
Yeah.
So when you are, and it's a commoditized business. So, yeah, you can feel the heat right now, KEI.
PE derating, right? I mean, if anything, growth baad mein dekhenge, but immediately the reaction comes through on the stock with regards to some of the P multiples getting maybe, it becomes very hard to justify any increase in P multiples. Let me put it that way. And then there is some compression, I guess, as well. So I think we'll have KEI coming up at 9:30. That should give us a real sense of what this would mean and whether this would take away from the listed players, their market share, etc. So Mr. Anil Gupta is going to be with us. And of course, on that capital allocation question for Ultratech, Mangesh Badang will be able to answer some of those questions as well. I think there's 5 minutes to go for the market opened. Let's bring in Sudarshan and Mitesh. Sudarshan, any trades?
Well, consider buying Voltas with a stop under 1250. Voltas.
Mitesh, what about you?
I think Bajaj Finance, which has been in a range of 85.50 to about 81.75, is a buy for me for targets of 8700. I think it's opening around that 85.50 mark. Once it clears that high, I think it should head towards 8700 shortly.
And all these KEI, Polycab, these kind of names, Havells, if you're looking at the pre-open rates coming up, Mitesh, anything looking,
Sudarshan, I think, exactly. So I think that's because of the news flow. But I think I'll keep a close watch on Havells. Havells on the last 3-4 occasions has taken support around 1490, 1500. If it starts breaking that, then I think there's a significant correction coming in.
Okay, all right. Well, thanks a lot for that, Mitesh. We'll come back to you to revise the calls with regard to the markets. Let's focus on one of the metals names, though, Hindalco. Kotak has come out with a note, and they have upgraded the stock to buy from reduced. The target price as well goes up to around 725. They've gone ahead. They've increased the EPS estimates by around 2.5% to around 3.2% for the next couple of fiscals on better margins at Novelis, and they see some kind of upside risk. They are saying all this talk with regard to this tariff concerns, with regard to the pressure on the spreads at current at current levels. Well, they are saying that the valuations actually are attractive, and that's why risk reward is attractive from here on. Scrap spreads, that was the concern, right? They're saying that has bottomed out and it will only improve from here on, which bodes well for Novelis. With regard to this Trump's tariffs, they say that in the past we have seen that this is actually a pass-through. Even in 2018, Novelis had a pass-through clause. So they're saying that should give some kind of comfort. Besides that, they're also focusing on the volume aspect. Novelis volume growth could be around 6% on a CAGR basis over the next few years. Remember, the last few years, they have been functioning at optimum utilization levels. So the volumes have been stagnant. So volumes will come back for Novelis. Even in the Indian operations, they're undertaking some capex. And that's why volume upturn will be seen even out there. So what they're basically highlighting is those concerns seem to be overblown on scrap spreads, the tariffs in the United States, and the pressure on aluminium prices. That explains why Kotak has gone ahead and upgraded Hindalco.
All right, so that is Hindalco for you coming up. Now, the other one, of course, is Ultratech, right? And we want to just pull up the stock price, as Nigel earlier pointed out. It's just about 1.5% lower. Nigel, but what's the street making in this one?
Well, the street basically is a little bit disappointed because this has come out of nowhere. It's the cleanest play in cement. It's the king of the ring. It's battled all competition. But for the timing, the reason the stock has opened up a little lower is because of the capital allocation concern. Some part of the street was said, well, you'd rather do it in Grassam. Why are you doing it through here? To give you the basic numbers, 1,800 crores is what they're putting over the next 2 years. They're going to set up a facility in Bharuch. And by December 2026, they believe the operations will commence. What attracted them to the cables and wires business is growing at 13-14%. The market size is 80,000 crores, headed to 1 lakh crores. So there is potential out there. And 30% is the unorganized market. Also, they could gain from backward integration with regard to raw material coming in from Hindalco, aluminium as well as copper. And they're basically focusing on strengthening Ultratech building solution, which has around 4,400 outlets. Margin-wise, well, it'll be relatively lower. ROC-wise, it'll actually be relatively better if you compare Ultratech's cement business with the potential that they could get from the cables and wires business. What the street doesn't like, capital allocation worries, as well as Grassam. It could have been done under Grassam. How do the numbers stack up? 1,800 crores you're putting in. Revenue potential could be around 7,000 crores. Margins could be in early teens. For Ultratech, it's very small. They generate 10,000 crores of cash flows. This will be less than 10% of their annual capex plans as well. Jeffrey says if there's a knee-jerk reaction, which we're seeing, it'll provide a buying opportunity. So that's the big story today. Ultratech moving into the cables and wires space. Not too good for them, but even worse for the cables and wires players that are seeing sharp downtick.
All right, we've got the first rates coming up on your screen. Right on cue, what do we have? It's kind of mixed, but blinking literally on the Nifty Bank, at least red and green. There you go. I think settling down now. 0.2 higher on the Nifty, so let's go with that one first. 0.4 on the Nifty Bank, so it's up. It's up in a decent way, at least to begin the day. IT index is flat on your screens. You got some 2:1 in terms of advances to decline ratio. More up than down. The Nifty heat map is coming up into view as well. Let's just have the Nifty Bank as well. Yeah, there you go. Half of 0.45 on the Nifty Bank at this stage. And it's opening up as we speak. Lots of banking and financial names at the bottom of the screen. And of course, we'll look at how names like Ultratech and that cable and wire segment is opening up as well. But I mean, at the index level, it's a good start, guys.
Well, banks outperforming. The Nifty Bank is up nearly 200 points, 0.5% gain at opening. The top gainers include Shriram Finance, Bajaj Finance, IndusInd Bank, where 9.5% of its loans go into the MFI sector. IndusInd Bank has seen some buying. That's up 1.5%. And big boy, HDFC Bank too, is holding up in the green with a gain of more than 0.5%. So banks on the front foot today. Other than that, Wipro stands out in the tech pack. It got very close, or maybe even breached the 200-day moving average in Tuesday's trade. But Wipro has bounced back from that critical support, and that's up nearly 1%. Reliance Industries is stronger today, so that's holding up and helping the Nifty and the Sensex keep itself up in the green. Hindalco on the back of the upgrade is up 1.2%. JSW Steel also up nearly 1%. Tata Steel up in the green. Metals had a rough session on Monday and Tuesday, and there is some rebound that you can see. On the way down, Ultratech Cement, it's a big 3.5% fall on Ultratech Cement. Top Nifty loser, two-wheelers in the red, 1% lower for Hero MotoCorp and Bajaj Auto. And other stocks down in the red include Trend, SBI Life and BPCL. All in all, it's a mildly positive green tick on the Nifty and the Sensex. So benchmark indices holding up in the green. It helps that the RBI has turned accommodative, so that's pushing up the banks. Crude prices too have eased to about $72.50 per barrel, but the mid-cap index is absolutely flat in the red right now.
Well, that's right, Reema. You know, Ultratech Cement, that's a little bit lower because of capital allocation boards. The street would have liked them actually to focus on their core cement business, so that's down close on 4%. But take a look at the nervousness in the cables and wires business. Polycab, 10% down. Massive volumes out there for the first minute of trade. KEI, down 10%. Massive volumes out there. Havells down close to around 9%. RR Cable down close to around 8%. Those stocks are taking it on the chin as we speak. Big downtick is what we're seeing out there. A few more stocks are a little bit lower on high volumes. You have Inox Wind. That stock is lower. RVNL, well, that one as well has, both of them have opened up a little bit lower. Inox Wind, in fact, is actually opened up. So good up move is what we're seeing on that one. RVNL is down close to around 2%. What else is moving around? Credit Access Grameen, I think there was a good green start out there. AB Capital as well. Big green start is what we saw, so a good uptake on that one. And Transformers and Rectifiers, they're guiding for better times ahead. Well, that stock as well is, up and about in today's trading session. So the headline index still holding in the green. The level you need to look at on the upside is 22,650. And the Nifty Bank, the good news this morning is it's made yet another higher high. Over the last few days, the trend was it was making lower highs, lower lows. So the hope is that one could lead it for the bulls from here on.
All right. The market open is good, right? 40 points is bad for cables and wires, but otherwise it's a decent kind of start. I'll just mention a few names very quickly. Bandhan is the biggest volume-led gainer. It's up 7.5%. It's followed by Chola, which is up about 4%. IndusInd is up next 2%. Shriram Finance is up 3.5%. So the top four volume-led gainers are all from the banking financial services space. And actually throw in a RBL, which is up 5%, 167 on RBL. Look at Credit Access, 7% gains on Credit Access, 922 in the MFI space. We'll have the Muthoot management join us in a bit. Stock's up 2.5%. It's back above 2,200. The management of Sirma was with us in the morning at 8:30. Sirma is starting 8% in the green. So 456 on Sirma. So the stock the market taking note of some of the commentary, I guess. I don't think there's any fresh news flow it's reacting to, except that IDFC First is up 2.25%. There is Inox India, which is up 6%, all with decent volumes here. So 962 on Inox India. There is AB Capital, which is up about 3%. AG's Logistics is up about 3%. And so it goes. But this is, the bulk of the big volume-led gains that we have on our screens at this point in time. And of course, I think, on the downside, by the way, the market breadth is flipped. It's 1,300 stocks down and about 850 stocks which are higher right now. The overall NSE market breadth. And of course, cables and wires taking a hard knock this morning. We have Manishi Ray Chaudhary with us, Chief Executive Officer at Demor Capital Partners. Manishi, good morning. Good to have you with us here. So if an institutional client calls you this morning, Manishi, for a view on cables and wires and says, well, guess what? You've got Ultratech entering the space and I own Polycab and I own Havells and I own KEI. What would you tell them?
I will tell him two things. Number one, as Finance 101 tells us, unrelated diversification, non-core diversification is always bad news. And I mean, if the promoters of the company decide to set up a new company entering this business with their own money, that's fine.
Manishi, from the point of view of cables and wire companies, Ultratech we'll talk later.
Right.
But for the incumbent players in the space, sorry, go on.
Right. That's the second bit. And secondly, when a company or a group which is cash rich and has the proven ability to raise cash in the capital markets, when they enter a new segment, that's always bad news for the incumbent players. This particular segment is, it had been for the past several years a benign oligopoly. So when you have a large group entering this sector, it creates a degree of, it obviously creates a degree of uncertainty, and that is what we are seeing now here. Many of these companies that have today declined about 9 to 10%, they were also trading at rich valuations. So a very small piece of bad news is enough to prick that bubble.
So better to get out on day one of the fall, Manishi, if one is an investor in cables and wires?
It would obviously depend on the kind of position that one has. Over the longer term, over the next maybe 3 to 5 years, this sector is definitely attractive. But what investors should do now is to very carefully assess the kind of valuations that they're paying for, get out of the relatively expensive stocks, may stay invested in the relatively cheaper ones, and also the kind of niche market leaders. We're actually seeing this not just in this sector, but in all across India. It's the market leaders who are able to command pricing. It's the market leaders who are able to gain market shares. So I think for the foreseeable time horizon, that would be the strategy to play.
So Manishi, now back to the broader markets. We've had a very nasty knock. We knew it was coming, given the kind of one-way rally, the valuations. It's just that when it comes, you feel so unprepared, and there is pain. Do you think there is more pain that lies ahead of the Indian markets, or are we closer to the bottom for the large caps and the mid cap and small caps?
Honestly, it does not surprise me. I have been saying this since late last year and on your channels also, that India is overvalued. And at that time, in late September, early October, Indian valuation premium compared to Asia ex Japan was about 90%. Now that has declined. Nifty 50 or BSE sensex, the frontline indices, their valuations have declined. 1 year forward P declined from 24 to 25 to about 20 right now, which is closer to the long-term average. Having said this, I must still point out that earnings estimates are still declining. Over the past 6 months, I think both small caps, mid caps, and the frontline indices, EPS estimates, consensus EPS estimates have declined about 10 to 12%. I personally think that in certain sectors, it's likely to continue for some more time. There are some sectors, let's say IT services or some of the other exporters, where I think the currency has been a tailwind. So there has been a bottoming out of those earnings estimates. But it's difficult to take a call on the market bottom right now. I would possibly be in a wait and watch mode. There are two variables I would look at. Number one, I talked about the earnings estimates on an overall basis bottoming out and beginning to recover. And second, the currency. We are seeing some good signs there also. The dollar seems to be moderating, but I would possibly, be in a wait and watch mode for these two variables right now.
Mm-hmm. Okay, all right. Hi, Manishi. Good morning and good to see you in. Manishi, but India has gone through a period of underperformance, right? I mean, if you compare MSCI India with China, with the developed markets as well, do you think that from here on, give and take everything, the valuations, the economic activity on ground, the accommodative stance from the RBI, the kind of measures we've heard from them in the last 50 days or so with regard to the rate cuts, OMOs, Forex swap, and now, they've been mostly accommodative. Do you think India has a good chance to outperform from here on?
I think there are a couple of variables, domestic variables, that have changed for the better. First, as you rightly pointed out, the RBI's relatively more accommodative stance compared to even about a month or two ago. Second, this injection of money into the hands of consumers, which we saw in the budget, 1 trillion rupees of tax breaks. It would obviously take time for the beneficiaries to spend more, and for that maybe another quarter to get that reflected into corporate top lines and earnings. But at least these are variables that have turned for the better. But remember that at the same time, there are some other variables that have turned for the better in some of the larger markets in Asia. For China, DeepSeek changed everything. It focused attention on the Chinese tech companies and their ability to reduce the tech usage costs across the world. At the same time, China also expanded their consumption support program in January. Their own version of Cash for Clunkers program was expanded significantly to include smartphones, wearables, etc. So it seems that China is now increasingly focusing on consumption support, and that would get reflected in the meetings that are coming up. As you might be knowing, between March 5th and 6th, they have the 2 sessions meetings, which are possibly the most important trigger to look at, as far as the Chinese markets are concerned. So, while domestic variables have changed for the better in India, some of the other options in the Asia ex-Japan markets are also increasingly looking more attractive to the foreign investors. And I think, we have to balance both sides. So it's for the next 1 quarter or so, I would possibly be in a kind of a wait and watch mode on India, as I, kind of said just now.
All right, Manishi, we will, absolutely wait and watch seems to be broadly the theme out there. Let me just quickly take a look at, if things have changed around at all for these cables and wire companies. Nothing at all. KEI is down 10, Polycab is down 10, Havells is down 8, RR Kabil is down 11. So these are steep, sharp knocks which are coming through at this stage. And Ultratech is down 4. So Ultratech started down, with a 1% cut tentative, but is down a full 4%, and is the number 1 volume-led loser at this stage. So that's what's coming through. I mean, the mood in any case is not all that great. And on top of that, negative news flow. I mean, you basically get hit twice with twice the impact in sort of up markets. Manishi, thank you very much for joining us. Great speaking with you. Appreciate it very much. Nigel.
Well, let's focus on the big story. Ultratech Cement. They are focused on entering the cables and wire segment with a capex of around 1,800 crores. To understand the impact on the company, that's Ultratech, we have Mangesh Badang, who joins us to help us out with what would his preference be from cement and what they should have ideally done. And the stock that's under pressure, KEI Industries. Mr. Anil Gupta, the Chairman and Managing Director, joins us on the show. Good morning, gentlemen. Thanks a lot for joining in. Well, Mr. Gupta, I'll come across to you first. Another big name coming into your space. You have close to around 10% of the market share. Do you think the industry is big enough to accommodate a large name like Ultratech Cement? Do you think that, in fact, you're going to be under pressure from here on? Because that's what the stock market believes.
Nigel, I'm absolutely clear that this and the market space is big enough to give space to another player. Number 1. Number 2, Ultratech will take minimum 3 years to start their production. Whatever somebody may say on paper, 2 years, but we have our long experience in developing the industries. Number 3, it will take minimum another 3 to 4 years to or 5 years to develop the brand for wires, and also to get the, if they come at all in the cables, it will take many years to get the approvals from different customers, different utilities, different departments, and also develop their channels. Secondly, this space is having thousands of customers. It is not like cement that you sell to some distributors and then they further distribute. Here, lot of, businesses we are doing B2B, where we are having direct relationship with the customers, and our SQs are too many. Our, number of items we deal with, the number of type of cables we deal with is too many. I mean, no company can do it unless they are focused on an industry for at least 15 to 20 years. So I have no reason. We are export focused. We have a lot of marketing team in place. So I don't have any fear about it.
Okay, all right. Mr. Gupta, you're putting down some points and you believe for the next few years, at least Ultratech will only be able to make a material impacts in the next 3 to around 4 years, according to you. And you believe the industry is large enough to accommodate another large player as well. My question to you is, going by what happened in the paints division, and their foray out there clearly disrupted the space and margins came under pressure as well. Do you think it'll put a risk to margins of cables and wires companies like you?
Absolutely not. We are already working on very thin margins of anywhere between 10.5% to 11%. And a newcomer, their costs will be much bigger. I don't think that, and they will take time to scale up the production. So I don't think that it will bring any pressure on the margins. Also, they are a listed company. They also have to make money. So they may not be able to disrupt the market by just slashing the prices, because it is in this space it is very difficult to increase the prices once you slash them.
Just one more point, sir. The unorganized market is around 25 to 30%. So do you think all of you all will prosper and you all will take away market share from the unorganized market? Is that the way you see things, from 25-30%, the unorganized market, say, goes down to mid-teens? Is that the way you're working with?
Unorganized market will always work differently. Till even now we have no competition with them. They have a separate segment of markets where they work. But our markets are always organized, and we have to compete with the organized players.
What is the difference, Mr. Gupta? Hi, good morning, Prashant here. That question is in the context of basically whether Ultratech, a new player, will go after your and other organized players' share, or will they kind of organize the unorganized? So what is the difference? As you say, you compete with organized players and not really unorganized, and that's a separate segment.
Yeah.
Now, what's the basic difference in your industry between, as you said, you compete with the organized space and the unorganized will remain, is a separate segment. What's the basic difference here?
See, it's not unorganized means the companies, who may be working with bill or without bill. I don't know. I'm not commenting on that. But I don't know what is the definition of unorganized. Unorganized may be very small players in the market, and whom you call unorganized. I can only say that we are going to continue to compete in the organized market, and the market is growing rapidly, and not only in India but also geographically. We have a lot of footprints in India as well as outside, and I don't see any impact on our business for next 10 years and our growth also with Ultratech coming to this business.
Will you have to spend more on distribution? Will you have to just give us a size? What is the size of the industry? What is it growing at? And what's the growth rate you see for the next few years? And will you quicken the pace of how well you distribute it across the country? Is there a geographical aspect to it? Just some of those things, sir.
We are already present all over the country. And so far as distribution is concerned, we have our distribution channels in every part of the country now. And our models will continue to take our distributors along with, so that we continue to get the market entry into new spaces. Market is growing rapidly in terms of industries, real estate, where the wires goes. So far as cables are concerned, they goes into the infrastructure, new industries, and power energy sector, and as well as exports. So the market, I think, will be growing anywhere between 13 to 15% year after year, and no one player can garner this kind of market. It is not copper or it is not cement that one or two players can monopolize.
Okay. Since you mentioned copper, Mr. Gupta, I wanted to understand, do you think UltraTech will have some kind of benefit because their group company Hindalco is into aluminum as well as copper? Or you believe that raw material availability is not a big benefit to them? Your analysis?
Yes, it will not be a big benefit to them. Reason is no company would like to subsidize one business to the another. So and even if one subsidized by 1%, how does it matter? Import channels are also open. So I have seen that in this context, we can continue to depend on imports. There are other players in the copper coming up, like Kutch Power of Adani, and Vedanta is already there, and imports are already easily available. I don't think that there will be any problem so far as supply chain of copper is concerned.
Mr. Gupta, just a couple of questions. Just to reiterate, you don't expect margins to come under pressure. It should stay at 10 to 10.5%, right?
Yes, absolutely.
But you have plans to expand your margins by 150 basis points by FY28. You've guided for that in the past. So what happens to this margin expansion target?
There will be no problem in margin expansions because this comes by economies of scale. And I have said that we have no fear in our growth plan of 20% plus for next 5 years, doubling our turnover to 25,000 crore. And we are rapidly growing in the export markets. I see that in next 2 years, 20% of our sales will be coming from export markets. We are already well established. We have a lot of approvals in many developed countries. So I can assure that there is no reason to worry.
So no risk to 150 basis points margin expansion by FY28. You maintain your revenue target of 25,000 crore by FY30, which means a 20% plus kind of revenue CAGR from here, and exports should hit 20%. Is that correct, Mr.
Yes,
Gupta?
absolutely.
And you also have a capex plan. I think you've already acquired 60 acres of land. Do you get the sense that, with UltraTech also coming on board, many companies are planning their capex, there could be a bit of an oversupply situation? Or would you rethink your capex?
No, there is no question of any rethinking of capex. In this year, we are doing a capex of close to 800 crore, or next year the capex will be 1,000 crore, which is ongoing at our new plant coming up at Sanand. And in the next financial year also, we will be doing a capex of close to 800 crore. We will not be reviewing or reducing our capex plan, and our growth trajectory will remain the same.
Okay, all right. Thanks a lot, Mr. Gupta, for joining in. You're trying to allay concerns of investors. For the time being, they're very, very nervous. But as you're saying, no change in your growth plans, no change in profitability. Industry is big enough to accommodate another big player. Thanks a lot for joining in. Well, let's hop across to Mangesh. Hi, Mangesh. Good morning. Thanks a lot for waiting by. Mangesh, why did they do this, right? I mean, UltraTech, the purest play on cement, the king of the ring, they have been maintaining their profitability. Why would they do something like this? Your first take on it.
Yeah, good morning, Nigel, and thanks for having me. Yes, the same question. So basically, what we have seen is that historically, the Aditya Birla Group has tried to, create certain pure plays who have grown bigger in the segments that they operate in. And most of the conglomerate business was in Grasim, which is basically the holding company of the group. Even the paints foray that they announced was announced through Grasim, and this is a relatively smaller investment compared to the paints business what they have invested. So we are also surprised that why they choose UltraTech as a vehicle to invest in, and whether the next stage of investment. So they basically mentioned that they want to be part of the entire construction value chain. So the jitteriness would be on whether next set of investment would also be routed through UltraTech, whether it will have an impact on capital allocation through cement. So that's the big question, and it's in that sense it is quite interesting to see whether where this corporate structure goes from here on.
So you're saying there's a risk that there could be further capital allocation in this non-cement play, and that could be a risk, right?
Yes.
Okay. The stock is down now 4%. If I put in the numbers, This is less than 10% of their annual capex, this 1,800 crores approximately. Their cash flows are superb, 10,000 crores per annum. In that scheme of things, the stock is down 4-5%. Do you think part of the bad news is in the price? And if there is no additional capex in non-cement businesses, do you think then the stock looks pretty well placed? Because after all, it's corrected from more than 12,000 rupees plus to these levels.
Yeah, see, the current correction is not because of any cut in numbers, because anyways, the foray that UltraTech has announced, that will probably get completed by end of FY27. And as my former speaker said, that probably it's going to take 3 years. So basically 2 to 3 years, I don't see, financials getting impacted much. But as I said, it's largely based on sentiment. So we need some more clarity in terms of where the next set of investment is going to come from. And whether now UltraTech is, because probably the operating cash flow of the business is relatively better, whether this will be used as a vehicle to finance most of the new ventures of the group. So that's where the uncertainty lies. So if there is more to come from here on, definitely I don't see this as a buying opportunity. But if I have to look at it purely as a cement play, definitely I would buy it.
Okay, and in your cement picks, where does UltraTech come in there? What is the top buy?
Yeah, those are large cap names that we like. We like both UltraTech as well as Ambuja. And the third one we would like to pick currently based on the regional dynamics is Shree Cement, which we feel is interesting.
Okay. All right. Thanks a lot, Mangesh, for joining in. That's the only question I've heard from all sell-side analysts. Why? Just why would you do something like this through UltraTech Cement? For the time being, the stock is down close to around 4%. We'll have to wait to see whether or not they have bigger plans with regard to putting money in non-cement businesses. For the time being, UltraTech is down, but the bigger pain is in the cables and wires businesses. Let's slip into a short break. On the other side, we'll get chatting with George Alexander Muthoot of Muthoot Finance. We'll be joining in to tell us about RBI's approval to open 115 new branches. Stay with us for that conversation.
Welcome back. The mid-cap index is down nearly 0.5%. And outside of the cable and wire stocks, Inox Wind has a cut of 7%. Vijaya Diagnostic, it rallied hard on Tuesday towards the end of trade, and now it's giving up some of its gains. IEX has taken a knock. Ola Electric is under pressure, and Ola Electric is now 63% off from its 52-week high. And railway stocks like RVNL, Ircon too are weak in trade. Cuts there of about 2.5%. But what's holding up in the green and going strong are the banks, NBFCs, MFIs. So Abhishek is here with more.
Rima, RBI has reduced risk-weight asset requirement for bank loans to NBFCs, and this is with respect to the momentum that you are seeing with the growth rate that has actually tapered down. So when the growth rate was about 30% YOY with respect to bank loan to NBFCs last year in October-November period, at that time RBI had put brakes and RBI had increased the risk-weight asset at various categories. Now that growth rate has declined to 7% YOY as of December sectoral data that RBI gives out, and that has put the comfort lid with respect to pulling down the risk-weight asset requirement that RBI had placed when the going was very aggressive. So restored risk-weight asset requirement with respect to bank loans to MFI sector by cutting the risk-weight asset requirement by 25%. Bank loans to NBFCs also by 25%. So this augurs well with respect to the funding requirement that NBFCs do get in as lower risk weight asset would make it attractive for them to go to bank borrowing as well. So some of the analysts have written note on the same. We have from IIFL Securities, which states that about 7 to 170 basis point of CET1 benefit is seen for banks, with a higher benefit for Bandhan Bank. About 170 basis point of CET1 ratio benefit occurs due to this risk weight asset requirement being lowered down. Bank of Baroda, Ujjivan as well as IndusInd Bank. So some of the key movement with respect to stock price that you are seeing is of Bandhan Bank, Credit, RBL Bank, L&T Finance, Chola, Shriram as well as AU Small Finance Bank. Back to you.
All right, Abhishek, thank you very much for that. So that is financials, but let's just stay with financials with specific news flow with regards to Muthoot Finance. We have George Alexander Muthoot, Managing Director at the company, now joining in. RBI has given them approval for opening 115 new branches. Mr. Muthoot, great to have you with us here. Thank you very much for your time. Prashant this side. Good to see you always, sir. You've got approval to open 115 branches. Could you give us a sense of what that means for business momentum at Muthoot?
Thank you, and good morning to you, Prashant. So, occasionally or periodically, RBI gives approval to Muthoot Finance to open branches. Last year also, maybe around this time, or maybe a little more later, earlier last year, we also received permission to open about 115 branches. So 150. So I think when we finish that, we have for the next list of branches. And now it's just a usual routine procedure that they give us permission for these branches. Now, the fact that for gold loan companies, customers are more comfortable to bring their gold or precious ornaments to the nearest branch and give it to them. In fact, 99% of customers prefer to come to the branch banks to deposit their gold. And gold has to be deposited for giving a gold loan. So opening a branch will definitely help us to increase our reach in newer locations and also increase the customer convenience for gold loan sector. Today, gold loans is a flavor of the market. More and more people are using the gold loan finance to get their money or their cash requirements. So opening up these branches or giving permission to start these branches is definitely good for Muthoot also.
In terms of the growth guidance, does that change because of this?
At this point of time, I don't want to change any guidance. We have given some good guidance last time also. So let us wait for a month. But on that question, the business is looking quite good this quarter also. So we are quite happy with the growth which is happening in this month also. So I'm not changing any guidance, but certainly there'll be better performance this quarter also.
Your guidance was for 25% AUM growth. Is that correct?
Yeah, I think 25 to 30 was your guidance, I think. So
25 to
probably, we usually give a 15% guidance year on year. We don't have been not changing that. Of course, we have been able to do much better in many years, maybe 20, 25, 28, etc. We've been able to do. And this year looks good, actually.
Okay, so 25 to 30% AUM guidance state. How has Q4 been for gold loans? Because Q3 was solid. Your AUM growth was about 37%. I know that's boosted by festival demand, but how has Q4 shaped up so far in the first 2 months, sir?
As I said earlier, Q4 is also looking good. We see good demand, especially in newer areas, and more and more customers are, as I said, utilizing this facility to get their funding requirement. As I said earlier, today, with all this noise in the unsecured loan space, etc., many banks and NBFCs have gone slow in the funding for unsecured loans. So there is definitely a need for funds, and people are using the gold loan as a easy method, easy way to get finance. And finally, money needs to go into the hands of people. The purchasing power of people definitely needs to improve, and I think this is helping. And together with the RBI's note about the risk weight of loans to NBFCs, I think all this augurs well for NBFCs and certainly augurs well for Muthoot also, because the availability of credit from banks will certainly be higher. The allocation by banks to NBFCs would be higher. Of course, about the interest rate reduction, maybe it may take one quarter or more to see some reduction in the interest of loan from banks.
So for your Belstar MFI, you're saying Q4 things may not change, but Q1 FY26 onwards, we could see a reduction in cost of funds. And how much do you think it could bring it down by?
I'm not very sure. Probably 50, 60 basis points is what we see there. But of course, one important thing there is that microfinance in the last quarter, this quarter, etc., nobody is growing. Everybody is just consolidating their books. So the need for funding also is much lesser. Having said that, probably the reduction of cost reduction will certainly be there in the next few months.
Okay, so that 50, 60 basis points is cost of funds for you, is it? Eventually,
yes,
it
exactly,
could be that much.
Exactly. Cost of funds, yeah. Cost of incremental borrowings.
Okay. For gold loans, Mr. Muthoot, what is your incremental loan to value ratio, sir?
The loan to value today, actually, if you look at the total portfolio today and today's gold price, our loan to value is only about 63%. But we give up to 75%. People take 60, 65, 70, and quite a few people take 75% also. So whatever is the requirement is what we give. Today, because the gold price is also high, if you see the whole book today, the loan to value is only about less than 65%.
Overall, it's less than 65%.
Yes.
A loan to value. But you can go up to 75 is essentially what you're saying. Mr. Muthoot, just one quick thing. I mean, we've had a dizzying rally in underlying gold prices, right? Very, very sharp move. It's like, in a way, maybe not like any other financial asset, but it's also like any other financial asset. We can see sharp moves either way. If we were to see a sharp pullback, Mr. Muthoot, in underlying gold prices, how would that impact you, a lender?
Yeah, the incremental lending would be based on the current gold price. So today the gold price is falling. The new loans, loan tenure is only 4 months, 4 months, 5 months. So the new loans will be given at the new LTVs only, the new price. So since we do that, there is certainly a risk mitigation mechanism. And mind you, we go only 75% maximum.
Okay, maximum of 75%. Mr. Muthoot, thank you very much for joining us. Appreciate you sort of being here on the program, and good seeing you as always here on CNBC TV18. Thank you and good luck. I think we have the management of Titagarh Rail with us, Rima.
Yes, Titagarh Rail Systems is on our radar. In Q3, it was a muted performance for them. They were impacted by order execution delay. But the company has also announced its ventures into 2 new areas of growth. One of them is shipbuilding. They're present in it right now, but they want to expand it. And the second one is setting up safety and signaling systems. Umesh Chaudhary, Vice Chairman and Managing Director at Titagarh Rail Systems, is now with us on the show. Umesh, morning. Thank you for joining in. This is Rima here. So first, let's talk about these, 2 new growth areas. One is shipbuilding and maritime, where you're already present, but you want to expand it. So what's the current size and how much do you want to scale it up to, and what are the steps that you're taking? And secondly, in the safety and signaling systems, lay out your growth plans.
Sure. Good morning, Rima. So as far as the shipbuilding and maritime systems is concerned, we have done a number of vessels for the Indian Navy. We have done some vessels for the Indian Coast Guard with GRSA. We have also exported a vessel. We have done ocean research vessels, but they were all done in our yard in Titagarh, which has physical capacity constraints. There's the water draft and the air draft capacity constraints. So considering the policy initiatives of the government of India, which in the budget we heard about shipbuilding and maritime systems by the Honorable Finance Minister being said a number of times, the board decided that since we already have the pre-qualifications, we already have the necessary soft skills, etc., we should look at this as a growth area. When we took up the passenger rail system business expansion a couple of years ago, I had also on your channel said that we would not be making any capital allocation for next 1.5 to 2 years in the shipbuilding. But now that we have almost come to a completion of the passenger rail system investments, we thought that this can be the next engine for growth for the company. And that's how this is being set up. The plan is to set up another yard, maybe both in the eastern side and the western side. And we will come back with the announcements as as the story develops.
What's the size of your shipbuilding and maritime business? Sorry, let's just finish
Sorry. So on the shipbuilding and maritime systems, we have an order book just about 300 crores. We are building about 10, 11 vessels for the Indian Navy as we speak, but these are smaller ones. And with this planned expansion, we would like to take up even the larger vessels. So as far as the scope, the growth potential of this is concerned, it is phenomenal because a very small percentage of the ships that actually, even for inland water or for specialized vessels that are operating today in India, a very small percentage is actually produced in India. And that's what the government is kind of emphasized. And we believe that the possibilities that exist in this sector are quite enormous. And having all the necessary skills, we believe we'll be able to make a very quick entry into this.
What's the capex you've earmarked?
We will announce that. We are still working on it. We've appointed the CEO. We've appointed the team. We are looking at the new yards, exploring at the different parts of the country where we would set up the new yards. So in due course, we would definitely, once the business plan is finalized, once the capex is approved by the board, we'll announce that.
And how soon, to your mind, once you complete all the setting up, the commissioning, how soon can it start generating revenues?
So the revenue will start generating immediately, but the ramp up will happen in a couple of years. So the revenue we are already generating because we have this is not a completely brand new business that we are starting. But those revenues are insignificant, I would say. So the meaningful revenue, I would say, would start getting generated from 2 to 3 years. But what is going to be important in the next 6 months is finalization of the infrastructure plans. And from the next 6 months to the next, say, 1.5 years from thereafter would be the order book that we can build up. So that's how the progression of this business in terms of the KPIs would look like.
Okay, but that's the next engine of growth, as you called it. And for safety and signaling, this is a new business vertical for you.
So again, we are already the leaders in the freight segment. We are establishing ourselves on the passenger segment. And if we really look at the railways complete ecosystem, you see, when we changed our whole focus from just being a wagon manufacturer to a rail systems provider, we had this in our mind that we should be end-to-end in terms of not the construction activity, but in terms of the system. So after the freight and the passenger, we believe that the kind of requirements that are there, both in terms of technology and in terms of quantity for the safety and signaling systems, it made immense sense for the company like us to be in that. We already have an MOU or a joint venture rather with a leader in this segment called Mermec, which was not very active. It was dormant over the last year or a couple of years. So we have initiated that, and we've already started participating in the tender. So we believe that the kind of budget, even if you look at the budget allocation that happens from the railways, a substantial part is happening and will continue to happen on safety and signaling. So we believe that it is a segment that we should not give a miss to.
Okay. And just one final question then. Q3 was a bit muted. There were delays in execution. Has there been a pickup in execution in Q4? And what are you likely to end the year with?
So, in terms of the delays of execution and Q3, it's not relating to us because our capacities are already at 1,000 wagons a month and we are fully on track to deliver 1,000 wagons a month. The problem happens because the railways were not able to give us the wheel sets, and this has been a perennial problem that has been existing for, I would say, decades. Ever since I came into this business, we've been having sporadic problems on wheels, and the Railway Ministry and the Government of India really took a definitive step for the first time in independent India, wherein they awarded a contract to set up a new wheel plant, which is being done by us and Ramakrishna Forging in joint venture. So, of course, that will take its time to come in. It will take by 2026, it will start production. But for the time being, railways have been ramping up the production in their own rail wheel factory. It's not yet completely streamlined, or it's not become normal We expect that in the next month, maybe March or April, wheel supplies from the railways will start getting normalized. But till then, we are continuing to have problems on availability of wheel sets.
Thank you, Umesh, for joining in. Look forward to the next one. We will slip into a very short break. We'll come back and talk commodities on the other side. Stay tuned. Welcome back. Let's talk commodities now. And Manisha is now joining in. Manisha.
Well, thank you so much for that. I'm taking a look at the crude oil prices right now because yesterday we saw 2% of a decline coming in for prices, and with that it's trading at a 2-month lows right now. Well, that is the report card on what the crude oil prices have done in last months or years. So in 1 week itself, we've seen prices decline by 5%. It's down 7% in last 1 month. And in this year until now, the crude oil prices have declined by 4%. If you look at the year-on-year prices, we're down by 12% in case of crude oil prices. Also remember 2023 and 24 as well. Crude did post both of these years into negative, and 25 hasn't started on a better note as well. As you can see, we are down 4% already in this year. But there are contradicting fundamentals on crude. When you talk about the factors which are weighing onto the prices, the major clearly comes in from potential Russia-Ukraine peace deal. If that happens, that would mean that you will have Russian oil coming into the markets as well. That would increase supplies, and that could weigh onto the prices. The other point is about the tariffs on in case of crude when it comes to Mexico and China, even Canada for that matter. And that could really disrupt the markets, not see economic growth come in, and that's weighing onto the space as well. But I also want to take you through factors which seem to be supporting crude oil prices at this point in time. The major in this is the crude inventories itself. If you look at the last 7 weeks, we've seen the U.S. crude inventories continue to decline. The latest decline has been by 2.3 million barrels, and that is supporting crude prices. And then you have to look at the U.S. crude production itself, which is at record highs at around 13.1 million barrels. This is a major news that came in overnight where U.S. is talking about revoking Chevron's license to operate in Venezuela. But at this point in time, Chevron really is 25% of Venezuelan exports. And if you look at that overall number, that stands at 240,000 barrels per day. If that goes out of the market, then you are looking at support coming in for prices. Apart from that, it also has to do with U.S. buying crude for its strategic petroleum reserve. Remember, U.S. has been saying that every time the crude prices come down, U.S. would want to buy for SPRs. And now that the crude prices are trading at a $68 a barrel, you could be looking at that buying coming in from U.S. as well. But there are some factors which also are leading to a lot of uncertainty into the markets, with the U.S. especially reaffirming plans to impose tariffs on energy imports from Mexico and Canada. It has talked about 10% on Canada and 25% on Mexico, but we still have to see that final paper there. And then U.S. also is threatening tariffs on European Union goods. So that uncertainty continues to keep the markets very, very volatile and jittery as well. If you look at the Goldman Sachs report, which came in overnight, it says that the Brent prices will trade between 75 to 80, exactly where we are trading right now. So it's going to be a range-bound trend for the crude oil prices, but volatility perhaps would just about continue.
Thank you, Manisha, for that. We will slip into a break with the news that the Nifty Bank is the only sector which is currently in the green. All other sectors are in the red. And if it wasn't for the 200 to 300 nearly point contribution from the Nifty Bank, we would have been firmly in the red. The mid-cap index is now down 3/4 of a percentage point. Small-cap index is down 1%. And the advanced decline ratio now stands at 1:4. Get into a break. On the other side is our special segment, Indianomics. Lata will be in conversation with a host of guests to discuss the NBFC and MFI risk weight cut and the prepayment penalty waiver.